So what happens when you take two economic powerhouses, I mean literally on opposite sides of the globe, and they suddenly realize they're a perfect match? Well, you get a multi-billion-dollar boom that's completely changing the game for South-South cooperation. We're going to dive into this incredible story of Bangladesh and Brazil.
All right, so let's set the stage. First up, you've got Brazil. I mean, this is the undisputed giant of Latin America. We're talking about a massive, massive economy. Think a GDP of almost $2.2 trillion. It's an absolute superpower when it comes to resources and agriculture. And then, on the other side of the world, you have Bangladesh. Now, its GDP is smaller. Yeah, around 450 billion, but don't let that fool you. This is one of the fastest growing, most dynamic economies in all of Asia, a real manufacturing engine. And here's the real magic of this whole thing. They aren't competitors, not at all. They're complementary. You know, it's like a perfect puzzle. Brazil has all the raw materials, the land, the resources, and Bangladesh, it has the manufacturing muscle and this incredible, young, dynamic workforce. Economists have a fancy term for it, structurally complementary, but really, it just means they're natural partners. It just fits. And believe me, this partnership is already paying off in a huge way. Their bilateral trade has absolutely skyrocketed, already crossing $2.3 billion. So this isn't some what-if scenario we're talking about. No, this is happening right now. It's a fast-growing reality, all built on the fact that they really need what the other has.
Okay, so what's actually being traded back and forth that's creating all this value? Let's pop the hood and take a look at the goods that are really powering this partnership.
All right, let's start with Brazil. So, if you're a country like Bangladesh with a huge and growing population, what do you need more than anything from a resource powerhouse like Brazil? What's at the top of your shopping list?
Well, the answer is pretty simple. Food security, and all the ingredients you need to create it. Brazil is a totally crucial supplier of sugar for consumers, soybeans and corn for Bangladesh's massive poultry and fish feed industries, even halal-certified beef. This trade, it literally feeds both the people of Bangladesh and its key industries.
But it's not just about food. Brazil is also sending over the fundamental building blocks for Bangladesh's industrial engine. Think about it. High-quality raw cotton to fuel those world-famous textile mills, and steel products to support the booming construction and even shipbuilding industries.
Okay, so we get what Brazil is bringing to the table. But remember, this is a two-way street. So what is this manufacturing hub of Asia sending all the way back across the ocean to that massive Brazilian market?
Well, no surprise here. It starts with what Bangladesh does best, making clothes. We're talking t-shirts, sweaters, trousers, all of it. They're finding a huge market as Brazilian retailers are looking for partners who can deliver great quality at a competitive price. And it's not just clothes. Leather goods, even ceramics and tableware from Bangladesh are starting to show up in Brazilian homes.
And what's really cool is how much they're diversifying. Bangladesh is now exporting sustainable jute products. Think eco-friendly bags that you might see in a Brazilian supermarket. And get this, its world-class pharmaceutical industry is ready to offer affordable generic medicines to Brazil's healthcare system. That's a huge deal.
So this relationship is now getting deeper. It's moving beyond just, buying and selling stuff. The next big phase is all about building things together through investment, creating these really strong, integrated value chains.
So, for example, you can totally see Brazilian companies investing in textile mills or food processing plants right there in Bangladesh. And at the same time, you could have Bangladeshi companies setting up warehouses in Brazil to get their products onto shelves faster. It's all about that key word, integration.
But of course, a partnership this big, it's not going to be without a few bumps in the road. The opportunity is absolutely massive for sure, but there are some pretty significant hurdles that both countries have to figure out how to jump over.
Okay, just look at this chart. The single biggest barrier for Bangladesh, hands down, is tariffs. Brazil's import tax on garments can be as high as 35%. Now, compare that to the average for other goods, which is around 13%. That huge difference basically eats away the competitive price advantage that is Bangladesh's #1 strength.
And it's not just the tariffs. There are other major obstacles too. First, there's the simple fact of distance. They're far apart. That means long shipping times and higher costs. Then, there's an information gap. A lot of businesses in one country just don't know what's possible in the other. And finally, you have the usual suspects. Tricky regulations and super slow visa processes that just make doing business way harder than it should be.
But here's the good news. None of these challenges are impossible to solve. There's actually a pretty clear roadmap that both the governments and the businesses can follow to take this partnership from just promising to something truly transformative.
Starting from the top, the governments really need to step up. Priority number 1, fast-track a preferential trade agreement, a PTA, to bring those crazy high tariffs down. At the same time, they need to work on simplifying customs, agreeing on product standards, and, crucially, making it way easier for business people to get visas and travel back and forth.
And it's not just up to the governments. Businesses themselves have a huge part to play. This means they've got to move beyond just simple one-off deals and start forming real, long-term alliances. It means setting up actual offices on the ground to understand the local market. And it means building a powerful story around this idea. The idea of two rising powers from the global south working together.
And really, that's the ultimate goal here. You have two nations thousands of miles apart but perfectly aligned economically. The opportunity is just sitting right there, ready for the taking. So the real question isn't if this partnership has potential. The question is how fast and how bold both sides are willing to be to take this from promising to truly transformative. It really makes you wonder, what could other nations learn from this incredible model of cooperation?